Big business houses in India don't just run one company, they run entire groups from finance to cement, from telecom to retail. They are everywhere. Now imagine a fund that invests in these giant business groups. That's exactly what the ICICI Prudential Conglomerate Fund is all about. But should you consider it for your portfolio? Let us find out through an in depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. So before analyzing this fund, let us first understand a few basic details about it. This is a thematic equity fund that invests in conglomerates, large business groups that own multiple companies across industries. Think of groups like Tata, Reliance, Aditya Birla, Mahindra, and so on. The idea is to capture growth across sectors through these big players. So as an NFO, it opens on 3rd October 2025 and closes on 17th October 2025. And some of the key features of this fund are: this is an open-ended fund type which belongs to the category of equity thematic, and it has BSE Select Business Groups TRI as its benchmark index. And there is an exit load of 1% for redemption within 12 months, but there is no entry load. And the minimum investment amount required is 1000 rupees, and the fund manager for this fund is Mr. Lalit Kumar, and according to the riskometer, the risk involved in this fund is very high, and the primary investment objective of this fund is that it seeks to generate long-term capital appreciation by investing in equity and equity related instruments following the conglomerate theme. Now, as we have a basic idea about this fund, let us move on to the analysis part of the video, where we are going to take a look at the pros and cons of investing in this fund. So let's start with the advantages. Number one, exposure to strong business houses. Like, conglomerates are usually financially strong with established market presence. And number two, since groups operate in multiple industries, the fund indirectly captures various sectors. And number three, large groups often benefit from India's economic growth story. And number four, reputed business houses generally have better governance and investor confidence. So these are some of the advantages. However, there are some disadvantages, like number one, fund is restricted to conglomerates, so it doesn't cover the entire stock market universe, so there is a huge concentration risk here. And number two, if large conglomerates underperform, the fund's return could be affected. And number three, this is a new fund offer, meaning this is an NFO, there is no track record yet, so investors cannot judge its past performance. And number four, many diversified equity funds already hold top conglomerate companies like Reliance or TCS, so it may overlap with existing funds in your portfolio. So these are some drawbacks that we need to keep in our mind before deciding to invest in this fund. So what is the final takeaway then? Is investing in the ICICI Prudential Conglomerate Fund worth it or not? So to sum it up, this fund gives you exposure to India's largest business groups, which could be a strong long-term theme. But since it's an NFO and quite concentrated, it is important to first check whether you already have exposure to these companies through your existing funds in your portfolio. And as always, align it with your risk profile and financial goals before deciding. Our personal recommendation is that if you're a first-time investor or even a conservative investor, you should avoid investing in this fund. And there are other similar existing thematic funds with track record which you can invest in, because you would be able to take a calculated risk here, because you will be able to analyze how it has performed in the highs and lows over this long-term period, instead of investing in an NFO where there is no proper research, portfolio or track record for you to able to take that kind of calculated risk. So it will be like taking a blind risk. And also, if you add it to your core portfolio and it underperforms, it might already affect the overall returns in your portfolio. And even for a seasoned investor, it's harder to predict when to enter and exit from a thematic fund. So it's better to avoid investing in an NFO like this, especially a thematic fund. But if you do want professional guidance, you can consult with your financial planner, who will look into the suitability of this fund's investment objective, risk profile, overlap ratio and allocation, and see whether it fits with your financial goals, your risk appetite, and whether it overlaps with your already diversified portfolio, and how much allocation should you give this fund to your portfolio. So they will be able to guide you strategically better with other alternatives that might fit better into your financial goals and long-term time horizon.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.